What's happening, guys? In today's video, I'm going to be giving you guys the exact step-by-step breakdown of a strategy that I've been using to generate multiple 5 figures of income trading binary options on pocketoption.com. If you guys get value from this video, please make sure that you like and subscribe to the channel. Any comments or questions you have, you can drop them below. Make sure you guys have a look in the description section. There's a link to my private Telegram where I'm going to be putting you guys on game, as always, around all things trading, investing, and generating a passive income. Before we go any further, it's very important that I let you guys know that I am not a financial advisor. This is not financial advice, and I am not your financial advisor. Before you guys risk any money in the financial markets, please consult with a financial advisor. Do your own due diligence, conduct your own research, and do not risk any money that you are not comfortable to lose. Remember, in trading, past profits do not guarantee future results. Now, I highly recommend that you guys practice this strategy on a demo account first before you guys test it in the live markets. But if you guys do follow this strategy and if you watch this video to the end, this is gonna be a complete game changer for you. It was for me, and I'm gonna make it as simple as possible. So guys, first things first, when it comes to any strategy in trading, please make sure that your risk management is on point, okay? So whatever that means for you, make sure that you do not allow your emotions to get in the way. When it comes to trading, the funny thing is that only 10% is skill. This strategy is easy. What's hard is managing your emotions, managing your greed, and staying disciplined. So step number 1 is selecting the asset that you want to trade. Now, I only trade OTC pairs, okay? OTC stands for over the counter. The reason that I trade OTC pairs only is because they pay out the highest amount and the markets never close for OTC pairs. So when it gets to Friday evening and the Forex market closes, you can trade binary options all through the weekend and all week round. So step number 2 of my strategy is selecting the right indicators and setting up the chart so it's on the right time frame. Now, the indicators that I use are the Keltner channel and the stochastic oscillator. Now, the Keltner channel simply shows you how the market is ranging on a short time frame, and the stochastic oscillator is a measure of the market being overbought or oversold. So if you take a look at the bottom of the screen, you can see the stochastic oscillator has been added to my chart. Now, anything below 20% indicates that the market is massively oversold and it's ready to be bought back up. Anything above 80% indicates that the market is overbought and it's ready to be sold back down. I also have the chart set up for the 1 minute time frame, okay? And I like to use candles for this strategy. Step number 3 is deciding whether you want to buy or sell. Now, personally, I only ever sell. So that means that I'm going to be selecting the red button that says lower. Now, the reason that I only sell is because I analyzed my trades and I realized I had more success selling than buying. I don't know why. That was the data and I'm not arguing with it. So I only sell. Now, because I only sell, that means that I am only selling downtrending markets. There's a saying in trading that the trend is your friend. So let's have a quick scan through and see if we can find a downtrending market. Here is an example. Okay, so you can see the market is clearly downtrending. So I would potentially sell this market depending on the other steps. If you're buying, then look for uptrends. Step number 4 involves determining your risk. Okay, now, as we mentioned, risk management is the most important thing. And you want to decide before you enter the market, how much are you comfortable to risk on a trade? Now, that might be 1%, it might be 2%, it might be 3%. I wouldn't recommend going higher than 3% in a single trade. However, I'm going to show you guys what I do. So let's say that your balance is $10,000. 1% per trade is going to be $100. So with my $100, I will enter the market up to 3 times. Now, I'm going to show you guys how I would enter the market and why I would enter up to 3 times. If the market continues to go against me after my first entry, it gives me a further 2 opportunities to be able to still walk away from that setup in profit. If my first entry clears, fantastic, we move on. So my first entry would be $20. If the market goes against me, I'll enter the trade a second time at $25. Now, the reason my second entry is $25 is that with a 92% ROI, if I clear the second trade but lose the first trade, I will still walk away from the setup in profit. Yes, just a couple of dollars, but still in profit. Now, if the market goes against me even after the second entry, I'll enter the trade a third and final time. Now, my third entry needs to be enough to potentially make up for the fact that entries 1 and 2 do not clear. So entries 1 and 2 have a total of $45. That means that I now risk $55 on my third entry, and if the third entry clears, then again, I still walk away from that trade in a little bit of profit. Now, if entries 3 and 2 clear, fantastic. And if all 3 entries clear, then you secured the bag. So step number 5 is the 30-minute reversal. Now, the 30-minute reversal, as the name suggests, is something that takes place every half an hour. Now, what you will notice is that around the 30-minute mark, 1 or 2 minutes before or 1 or 2 minutes after, the market will take a sharp reversal. Okay, now this doesn't happen all the time, but it happens very, very often, and you want to be prepared for it in case it happens during your setup. Now, I prefer to wait until the 28th or 29th minute before entering a trade, or for example, the 58th or 59th minute of the hour before entering a trade. If you do experience a half an hour reversal, don't panic. Make sure you stick to your strategy up to 3 entries maximum. And if you do notice that the market is reversing, try to identify a strong area of resistance by looking left on the chart. So you may notice a double top or a double bottom. So if I am trading around the half an hour, as I mentioned, I will try to identify a strong area of resistance by looking left. The way that I'll do that is by changing the time frame from the 1 minute candle to something like 1 hour. Okay, it's very unlikely I'm going to identify a strong area of support and resistance on a lower time frame. For example, here on this chart, we can see a double bottom here and a double bottom there. They would be 2 strong areas of support or resistance. So right now on the screen, we have a really nice setup. Okay, now what I love about this setup is that it satisfies all the requirements. Downtrending market, and we've got the stochastic oscillator screaming overbought. Okay, now I jumped into that trade a bit late, but if it was to retrace back up, then I will enter it again. That was meant to be a $20 order, but if it does retrace back up, then I'll enter again here for $25, okay? And if the market was to go against me a third and final time, then I'll enter at $55. But you can see now that this is looking very, very overbought. I'm in the market now. My second entry is in profit. First entry is in and out of profit. But this was a great setup, okay? So the market was downtrending. It's just retracing slightly, but the stochastic oscillator is screaming that it's overbought. And you can see that this trade is dropping very, very nicely. Cleared not just one position, but the second position is also going to clear. So this was a really, really great example. So we got 15 seconds left to go in this position. You guys can see everything lined up. Okay, yes, it wasn't on a half an hour reversal, but that's not an essential part of the strategy. Okay, so you guys can see there 2 entries cleared. So to recap the strategy, step number 1, select your asset, which should be an OTC pair because they pay out the highest. Remember that OTC is a decentralized market, so it's relatively unaffected by things like news. Step number 2 is your chart setup. Now, I put the candles on a 1 minute time frame because I'm trading 1 minute in this strategy. And the indicators that I use is the Keltner channel as well as the stochastic oscillator. Now, step number 3 for me is identifying a downtrending market because I am selling. The trend is your friend. Do not trade against it. Step number 4 is your risk management. Okay, so predetermine in your mind exactly how much you're going to risk on entries 1, 2, and 3 if required. And step number 5 is to identify a 30-minute reversal if you see one. Now, if you satisfy at least 4 of these requirements in this 5-step strategy, then it's a highly likely outcome that you will win the trade. So guys, that was the 5-step strategy that I've been using to secure the bag. I hope you guys got value from that video. If you did, please make sure that you like, comment, and subscribe. And if you guys want to get further mentorship on that strategy, make sure you join my private Telegram. The link is in the description section. Additionally, I'm going to be putting you guys onto more free game about trading, investing, and all things surrounding passive income. See you guys next time.